Good afternoon, everybody, and thank you for joining today. This is our first savings strategy webinar. So again, thanks for joining. My name is Carla Giacomini, and I'm the Director of Digital Marketing here at Alterna. I'm really excited to be hosting this webinar today. And throughout the next hour or so, we're going to talk to you about creating a savings plan that's going to help you reach your financial goals, along with savings tips and tools to get you there. So before we get into the webinar, I just wanted to take some housekeeping tips, take care of that. So first of all, everybody's going to be in listen only mode. Also, we're going to be taking questions. So please feel free to put your questions in the Q&A on the bottom of the screen. You can do that as we go through the webinar. If you see something or hear something that you have a question on, just feel free to put your question in the chat. At the end, we will address all the questions. If we don't have time to get to all of your questions, we will send the responses to you by email. Okay. And also, the webinar is being recorded. So we do record the webinar so that should you not be able to see the whole webinar, you can come back to alterna.ca, and we have an Advice for Life webinar section, and you'll be able to see the full recording there. So now I'd like to introduce our two guest speakers. Very thrilled to have Sapana Banskota with us. She's our Danforth branch manager out of Toronto, and she's worked in the banking industry, and she's worked at Alterna for the past 20 years. She had a great little story before we started on how she actually started with Alterna. So it was good hearing that, Sapana. So she's helped many members with their banking and financial goals. Sapana's passion lies in member centricity and providing solutions to complex member needs. We also have Samantha Henderson. Sam is branch manager of Westboro, and she has been in Ottawa, and she's been with Alterna for over 13 years. Sam's experience includes supporting young adults and those that are new to Canada on better understanding banking, budgeting, and building for their financial future. So both of you have great qualifications for this webinar for sure, much better than me for sure. Sam was born and raised in Ottawa and is passionate about giving back to her local community. Some of the notable causes that she's involved in relate to youth, mental health, and food insecurity. Welcome to you both, and thank you so much for joining me today on this very timely topic about savings. So before we head into the presentation, I'm just going to do a couple of things. I'm going to go through what we're going to cover. And the second thing we'll do is we're going to kind of kick it off with a really short poll just to get your thoughts. And then I'm going to hand it over to our experts. So what we're going to do today is talk about the importance of savings and financial goals. We're going to talk about budgeting and how to jumpstart your savings. And we're going to get ready for the poll. And the poll is anonymous. So, we won't know who's answering what. So please feel free to answer. The first question is, do you have a savings and or budget plan in place? And you can either answer savings plan, budget plan, both savings and budget plan, or neither. And we'll just give a minute, 30 seconds or so to see who's how everybody's answering. I think we're almost there now. Great. So we've got a couple more people coming in. Okay. Oh, there's another one. Okay. We'll show the poll now. Let me see here. So let's see. Hold on. So we're going to end the poll, and then what we've got is savings plan. 41% said that they do have a savings plan. Budgeting plan is much smaller. Only 7% have a budgeting plan. 17% have both. I'm not sure how that works, but anyway, they have both. And then neither is 34%. So, wow, interesting numbers. So definitely we can help you with this. And both Sapana is going to actually kick this off, and she's going to talk to you about the importance of saving and financial goals. So some of you have already got a good start, and I'm sure she can help those who don't have a savings plan and help those that already have a savings plan with some other ideas potentially. So thank you, Sapana. I'm going to hand it over to you now.
Thank you so much, Carla. Hi, everyone. I'm excited to be here to cover this important topic. I hope that you all find today's presentation valuable. Okay, so let's jump right in. Saving and budgeting are important practices for keeping track of your finances. You should work towards creating and maintaining a comprehensive budget that includes any debt payments as well as a robust savings plan. Okay, so in today's world with prices of pretty much everything having gone up, it isn't easy to save. But start with something. Even if it's $50 each pay, you can start somewhere. It is one of the most important and essential financial habits to get behind. And people who have financial security most always have a savings regimen. For any younger members in our audience today, remember to start early and save regularly. Paying yourself first. So this slide talks about the 50-30-20 rule as shown on the slide. When you receive your paycheck, aim at putting 50% towards your needs, 30% towards your wants, and 20% in savings. You may not be able to get to these numbers right away. So, as mentioned in the last slide, start small. Maybe it's 5 or 10% that you start with, but the key thing is to save. Setting goals can help define your spending. It can track your progress and achieve your objectives. Attaching reasons to your goals can make them more meaningful. For example, build up an emergency fund so you can afford to pay rent if you lose your job, or get rid of credit card debt so you can save money for a home down payment, for example. If you don't know where to start, take a look at your situation, assess your income, your expenses, and your budget. Some examples of financial goals are creating a budget, building an emergency fund, saving for retirement, and paying off debt. Consider all necessary pieces of a plan, not just the goal, but also the steps you'll take to reach it. After you've identified and vetted your goals, mark them down. This can keep objectives clear, organized, and tangible. Okay, so we're going to talk about some short term and long term goals. Short term goals describe your more immediate plans beyond simply covering necessities. Although timelines can vary, these are the things you'll spend money on generally within a few months or years. Some examples of short term goals are emergency funds, credit card debt pay down, purchase of personal goods, travel, wedding, and minor repairs to your home. Long term goals are usually big picture items. These goals may take several years or even decades to reach. Your distant goals typically involve more money and regular attention than short term goals. Some examples of these long term goals can be your retirement fund, paying off your mortgage, starting a business perhaps, and saving for your child's college tuition. Next, we're going to talk about managing debt. So, managing debt is a key component to securing your financial well being. Remember these key points in helping you manage your debt load. Try reducing your spending on items that are not an absolute necessity, like a daily coffee or maybe one of those movie or music streaming subscriptions you might have. I'm sure there are a few that you never use and have forgotten about, much like me. Try not to accumulate new debt until you have paid off your current debt. Try increasing your monthly payments to pay down debt faster, even if it's a little at a time. Find ways to reduce your interest rate. If you own a home and you are able to tie your debt into your mortgage, this will help to reduce your interest rate substantially. Creating an emergency fund. So, creating an emergency fund is very important in becoming financially secure. Rule of thumb is to try and save at least 3 months worth of expenses when starting out and build from there. Having 6 to 9 months worth of expenses saved is ideal, but you got to start somewhere. So at least 3 months is what you should start with. Okay, so now we'll dig a little bit deeper into budgeting. So, budgets are an important financial tool for keeping track of your finances. Working toward Work toward creating and maintaining a comprehensive budget that includes any debt payments. Having a budget helps you to avoid spending more than you have, cover your costs. It helps prepare you for the unexpected. It creates a blueprint to help you manage credit and debt wisely. It helps you to take control of your hard earned money. It doesn't have to be as strict as some people may think. It's a roadmap that includes car repairs and school trips, for example. Remember to keep track of your spending. This is really important. Parts of a budget are income, expenses, and the difference between the two. Do you have a surplus or a deficit? The basic principle of budgeting is to determine your income and spend according to the amount of money you have so you don't get yourself into debt. But budgeting is about having the tools to control your financial situation. Having a budget strategy has its benefits. It will prevent you from overspending, it'll help you to decrease your debts, and it will provide you with the ability to save so you can meet both your short and long term goals. Some things to ask yourself. Do I know what my money goals are? Do I know what I pay out monthly on fixed expenses and overhead? Do I know the term, amount of payment, payment frequency, and due dates for my debts? This includes any credit cards, loans, lines of credits that you might have. Do I know what I spend on daily living expenses and how do I keep track of it? Do I have an emergency fund? If not, how much can I set aside each pay or month to build up an emergency reserve? It is a general rule of thumb that your housing costs should equal less than approximately 30% of your gross monthly income. In addition, your total monthly debt payments should not exceed 40% of your gross monthly income. Um, these are some of the expenses people typically forget to include when they're thinking about creating their budget. Kids' activities, pet expenses, because those can get really pricey, retirement for yourself or another family member, post secondary education for children, and returning to school perhaps, elderly parents who will be in need of assistance, specific emergency funds for things like job loss, health problems, and death. Next slide, please. Thank you. You can track your spending using online and mobile banking. Our app is available for both iPhone and Android users. You can visit the App Store or Google Play and download the Alterna mobile banking app. And secondly, the Canadian government offers a great budget calculator for easy tracking. Their Excel document is easy to follow and update. It saves information you input so that you are not required to add information again. We would really encourage you to test the website as they offer you a tour to see how this tool functions and can be easily updated daily. This method is compliant with privacy protection legislations in place. Okay, I think we're going to jump into another poll now.
Yes, this we're going to do another poll for sure. So the second poll that we are going to do here is we want to try to delve into what you're most concerned about regarding your finances. You know, economic climate is very, you know, people are saying we might head into a recession. So the cost of living is rising, so I can't save as much as I would like to. Potential recession and its impact on my finances. You don't have an emergency fund, so you're stressed that, should something happen, you don't have those extra funds, or I can't afford enough to save for a down payment on a home. A lot of new homeowners, especially in the GTA and in Ottawa, are having a hard time with home prices and having that down payment. So there's lots to think about for sure. Some people are still entering their answers. Just give it a couple minutes, a couple of seconds, not a couple of minutes, but just wait until I see things stabilize. But it certainly seems that it's the cost of living, which is the cost of living and recession, but cost of living is definitely the one that people are really worried about here. So I'm just going to end the poll because I think everybody's answered, and I'm going to share the results. So as you can see, cost of living is rising, so I can't use them as much as I would like. I can't save as much. That's like 52%. So a lot of people are worried about that. People are worried about the recession and impact on the finances. That's 26%. And then 16% don't have an emergency fund, and 5% can't afford that down payment for the home. So not as many people, I guess, are first-time home buyers here in the webinar. But thank you so much for sharing that with us. So we're going to now head into some savings, starting your savings with Samantha. I'm going to hand it over to you, Samantha.
Thanks so much, Carla, and hi, everyone. I'm going to talk a little bit about building savings and take the opportunity to build on some of what we've spoken about with Sapana earlier.
Sam, you're just echoing a bit on my end anyway. I'm not sure. Is your headset maybe, but it's echoing a bit. But anyway, let's keep going. Just talk slowly, please.
So today we're going to talk about jumpstarting your savings and build a little bit more off of what Sapana has already spoken about. Is that a little bit more clear, Carla?
Yep, that's great.
Perfect. So if you want to go to the next slide.
Yep.
Perfect. So 4 steps to building an effective savings plan. Your first one is going to be to set up an emergency fund. And just a reminder that you really should be aiming for 3 to 6 months here. You're going to think about the type of job, industry, and stability that you have as well to think about the possibility of needing more. The second step is to pay yourself first. And so when we say to pay yourself first, you want to build this in before you're paying bills or buying groceries. You want to take the opportunity when your payroll or direct deposit comes in to set up a direct transfer to savings. And it could be to a registered savings plan, or it could be for shorter long-term savings goals. Your third step is to make it automatic, and that goes hand in hand with your paying yourself first, but you don't want to have to manually go in and do this every time. Otherwise, it's unlikely that you'll maintain a savings plan. You want to actually take advantage of the automatic transfers available to you to have this happen. Your fourth step is to grow your savings. So you want to speak to an advisor, and based on the products that are available to you, you want to look at higher interest savings options, perhaps GICs, or speaking to a licensed advisor for other options. So some tips and best practices. You want to review your bank and credit card statements on a regular basis to review where you can actually uncover some additional savings. So you can look at subscriptions. You could, review where you're perhaps spending too much money and cut back. You want to create a budget, and there were some great resources shared earlier, such as the FCAC government budgeting tool, and you want to Do that as soon as possible if you don't have one set up, and review it regularly. You want to set this up so that you can reduce your debt and your debt payments over time. If you do use your credit card, make sure that you pay the balance in full each month, as it's the highest interest bearing product. If you aren't able to pay it in full, you should pay as much as possible. If you do carry any loans, please make the regular payments and additional payments as possible to decrease your interest load. Additionally, you want to look at savings or investment savings accounts that can earn you a little bit of interest on your emergency accounts or your accounts that are set aside for other savings goals. Next slide. Perfect. So, some additional ways to uncover savings every day would be to revisit recurring charges such as subscriptions or meal subscriptions. It could be Netflix, it could be Spotify. Take a look at what you're actually using versus needs versus wants. Cancel any that you aren't using regularly. Take the time to find savings at the grocery store. So there's a lot of great apps out there to help you look at flyers, find the best deals. You can price match when possible. Try to eat at home or bring food when you're working as much as possible. I've started making my coffee, for example, in the mornings. It's a savings of $3 a day, and it adds up quickly. And please, don't buy things that you already have. Look at your buy nothing groups in your local communities as another opportunity to take advantage of recycling items and not making additional purchases that aren't necessary. Set it and forget it. So, as we talked about, you want to schedule automatic transfers. This would be paying yourself first. You can do this from your checking account on payday. This can go to a registered savings plan, a regular savings plan, or even into an investment account. Using your alternate debit card, you can take advantage of our buyer protection or extended warranty program. So did you know that just by carrying our card and using it for regular purchases, you can protect purchases that you buy for up to 120 days? So, for example, if you buy something and drop it and it breaks, you're actually protected for that. There's also an extended warranty program. So for items you buy that are we can actually extend the warranty up to 2 years. You can take advantage of our nest egg products for as little as $10 a month. This is a great way to build additional savings. As a mom to young kids, I use this as a way of building savings for my kids that are not accessible and spent easily. Save the change. So whenever you make debit card purchases, you can have it set up to round up to the next dollar and direct it to a savings account of your choice. This is another great small way to work on building your savings without thinking about it. Some savings options. So just going over a few examples of some various options and investment possibilities. You do have your GIC or term deposits. So these would be a guaranteed interest rate with a protected contribution amount. You can typically opt for terms between 1 and 5 years with a higher interest rate. Your principal amount is protected, and you can, speak to us for rates and products that would meet your needs. You have the tax-free savings account, which is a registered plan that's available to Canadian residents who are 18 or older with a social insurance number. The money earned or withdrawn is non-taxable. So this is a great way to take advantage of additional investment opportunities as a way to, protect it from taxes. You have your registered retirement savings plan, or the RRSP. So each year between January and the end of February, people will make the RSP contributions to take advantage of the tax deductions. But additionally, you can do this throughout the year and take advantage of compounding interest and get it done early. This is an opportunity for you to save for your retirement in the long term. The contribution limit is based on your income. Additionally, you can use this money if you are a first-time home buyer towards your down payment on your first home. And it's not on the screen, but I did want to address the first-time home buyer savings account, which I know is of interest to many young people. And this is going to be something that we're able to offer through a partner as of next week. So that's really exciting for anyone who is looking for more information. You can definitely speak to one of our advisors. So your 8-step guide to saving. So number one would be to record your expenses. You want to include savings as part of your budget. If it's built in and you're expecting to do it, you're more likely to maintain that. Look for ways to cut spending by reviewing bank statements and credit card statements on a regular basis. You want to set savings goals. So people who actually set goals are much more likely to attain them rather than someone who's just setting aside money with no real plan. Well, determine your financial priorities. So depending on your life stage and the milestones that you're hitting, you may have different priorities at different times. Pick the right tools that are going to support you meeting your financial goals. Make your savings automatic. So set it and forget it. You want to review and adjust your plan on a regular basis and as your situation changes. So as someone in the financial advice sector, we would suggest an annual meeting with an advisor to make sure that you're still working towards meeting your goals and that you're adjusting your plan as required.
Okay, thank you so much, Sam and Sapana. We're going to head into the questions that are in the Q&A. So we'll start with, we had a question from Trent, a member, who's asking about the 50-30-20 rule. He wants to know, should it apply to your gross pay or after tax pay amount? Sapana, what do you think about that?
Thank you so much for the question. It should be your income after taxes, so your net pay.
Okay, great. I have another question that's come in. So I smiled at this one because I have the same jar of coins. So it says, I have a jar of coins. I'm thinking to use these to begin to set up an emergency fund. Should I separate and wrap them before bringing them in?
Yes, definitely. We would appreciate if you could wrap those before you bring them in, but it's still a great way to start. You got to start somewhere, even with the jar of coins. That's great. But yes, please wrap them.
And who knows how big that jar is?
Yeah.
mine are multiple jars at this point, so the member may have quite a stash there. Okay, and there is another question which one of our members has, and is it necessary to contribute to an emergency fund when laid off and receiving government assistance? What would you say, Sam, on that one?
That sounds like a really challenging time, and I think it's really important to review your budget in that case. Certainly we always suggest that you work on building your emergency fund, but it's going to be most important that you're taking care of your necessities and your basic living requirements first and foremost.
Yeah, for sure. Thank you, Sam. So, Sam, there's another one from our member Sunny saying that, interest rates for RSPs are not very high. What do you suggest instead of saving for retirement?
The term deposit rates are not just specific to RSPs. And right now we're kind of in an interesting time, certainly with Bank of Canada changing and increasing rates on a pretty regular basis. We're hoping that things stabilize a little bit. But there's so many different opportunities, so if the term deposits aren't meeting your financial goals and your needs, then I think it's important that you meet with a licensed advisor and explore other options that could provide a better rate of return on your investment.
Great, perfect. Thanks, Sam. And Sapana, we have another question from a member asking, since I'm not in a high income bracket, is it wise for me to consider an RSP or maybe something else? I guess they're thinking the savings potentially on from a tax perspective may not be
Yes.
there.
Yes, exactly. I mean, that's a
Mhm.
great reason to save in an RSP, but you got to remember that an RSP is savings for your retirement. So
Long term.
putting money into an RSP, yeah, long term, exactly. And you also have to consider if you've got if you're working, you've got some pension or not. All of those things sort of have to be considered. So we would really encourage you to actually sit down with one of our advisors who can actually look at everything for you and kind of guide you what would be best to invest in, and depending on your goals and everything else that we would look at for you.
And Sam, I'm going to throw this one to you because I know you are passionate about nest eggs. So we have a member asking, can you elaborate more on this product called the Nest Egg Savings?
Yeah, so the nest egg is a term deposit product. So um, rather than putting a large lump sum in at the beginning, which is typical with a guaranteed investment certificate product, in this case, you can opt to do a monthly amount. So for myself, I do $20 a month into a nest egg for each of my kids, and it just builds over time. The interest rates are significantly higher than a regular savings account. It's not easily accessible, so it's a really great way to work on building savings.
Okay, great. So, Sapana, here's one about, that, should I be attacking credit card debt before savings? Should I just put a little money away on savings and the majority on the credit card debt? What,
Yeah,
uh,
that
what are your
is
thoughts?
a thank you, Carla. That is it's a good question. You should look at um, what the interest rate is on your credit cards. Now, if they are high, and most of them are high unless you've got a promotional rate, then yes, work on getting those debts paid off. And as I had mentioned in the presentation, if there is a way you can consolidate the debt and wrap it up into your mortgage if you own a home, then that's something you could look at doing so that you can start to save as well. But yes, attacking your credit card debt would be for top priority, I would say.
And I don't know, I'll just throw this out there, but there are balance transfer offers which allow you to move over, your credit card debt to a new credit card at a much lower rate. So
Yeah,
that's another thing potentially to consider, right? There's a lot of really good, you move your balance over at a much, much lower rate. That way you're not incurring additional, some are even at zero, so you don't
yeah,
incur additional interest charges. Yeah.
exactly, exactly.
Yeah, yeah. Okay. Oh, here's one for you, Sam. You talked all about registered plans. One of our members is asking, is it better to put money into a TFSA or an RSP?
So this is forever the question, and you can find articles really talking about that like break even point, but there's no exact science to it. It's going to depend a lot on your personal situation. Like Sapana said, it really is going to be important to look at your employment situation. Are you already, opted into a pension plan of any kind through your employer? And if not, what are you hoping to save for retirement? What do you want your lifestyle to look like? And what's that going to mean for you? So there is the immediate tax deduction question, but there's the long-term planning that's really important to consider as well.
Okay, great. Thank you. And Sapan, I have one about emergency fund here from a member. They're asking when creating an emergency fund, what account should they have for this fund? Should it be a savings account or some other type of account?
Yes, it should definitely be some sort of savings account, because you do want your emergency fund to be um, easily accessible should you run into an emergency. So we do offer higher interest savings accounts. So that is something that you could consider. Um, maybe once you've sort of built up a little bit in your emergency fund and you can sort of afford to lock up a little bit more, then you could consider the nest egg that Samantha had talked about, because it's also another fantastic way to save and earn interest, because it just has a great, a fantastic rate at the moment.
Great. A lot of interest, Sam. I think your excitement it really is transferring. We have a lot of interest, a lot of questions about nest egg. Okay, so I'll do one. There's a couple more here. So it's saying, how can I access the nest egg savings account, and can it include TFSAs? Sam.
Yeah, so the nest egg, it's not a like it's a savings product, but it's not a savings account. So it is a term deposit, which means you are selecting a term with a set maturity date. So you do need to know that what you're setting aside is, like Sapana said, maybe above and beyond what you need readily available in terms of an emergency fund or anything like that. Otherwise, you would be accessing it after maturity. And yes, you can do it within the TFSA umbrella.
Okay. And is there set maturity dates for it?
Yeah, there's different terms. So
Different.
we can, yeah, so you can opt between a 1 and a 5 year. We have a few promotional rates right now, for example, in there.
Perfect. Great. So another one back on the nest egg, but I'll throw this over to Sapana. Where are these nest egg accounts available? They are not redeemable. I guess you kind of answered that, but can you stop monthly deposits if you need to pause in between?
Yes, I believe you
So,
can. But if maybe you can correct me if I'm wrong, Samantha. I think you can pull down your contribution to a minimum of $10 a month if you run into a month where you can't afford to put as much. I believe you can change your contribution and then change it back when you're comfortable. Does that
Yeah,
sound
it sounds right, but I'm going to be honest that I've never had to change it. So I think that's something that maybe we can take away, and
exactly?
whoever asked that question, if maybe they wanted to get in touch with us, we can provide the answer.
Exactly.
or what we can do as well is we can provide everybody in the webinar with the answers for sure, because I'm sure other people have the same or wondering the same thing. So we can definitely get back to you with all the details. They did say, are they, they're not redeemable. So there is a term, as Sam said, right? You can choose the term. I think 1 year is the uh, the smallest term, correct, Sam? 1 year,
That's
right? Yeah,
correct. Yeah.
yeah. So, right. Okay, perfect. Thank you both. And we have another question. This is how old does a child have to be to begin saving in a nest egg account? Or have a grandma or put some money, small amount in for them. So Sam, you were saying you've had those for your kids set up, right?
I started them. I think probably my oldest was like 1 at the time. So
Mhm.
because it's coming from my account, and even though they're a minor, it's perfectly fine. We have youth accounts set up where the parent or the guardian can be set up as a guarantor and can facilitate those transfers.
Great. And there was another question, I'll just address it now. Someone is asking if, I guess they didn't see the whole, they didn't come in for the whole webinar. They're just asking if it's available. It will be available. So we will be making, it's recorded and it's going to be available to you after probably tomorrow at this point. We just have a few more questions. Again, some of them are very similar to some of them we've asked, but one is, should I invest my extra cash or use it to pay off debt? And that's, I guess, depends on the debt, but I'll let Sam speak to that.
Yeah, that's a really interesting question. And I think depending on when you ask it and what the exact situation is. So if the debt that you're looking at is at a high interest rate, you certainly want to pay that down or pay it off if possible. But there have certainly been times where I've been talking to members or clients, and specifically, they might be looking at making a lump sum mortgage payment, and it's important to look at what the rate is versus what they're able to invest and look at a rate of return on it, as well as their comfort level, right? So some people are just highly uncomfortable carrying that debt, and it's going to bring them peace of mind to pay it down, which is also really important to keep in mind, as well as the actual rate of return that they can look at getting when they invest it.
Great. We have another question is, how soon do I need to start saving for retirement? Sapana.
As soon as you can. So, as I had mentioned in the presentation, the earlier the better. Sort of get yourself into the habit of saving. So, the earlier you start and make it a habit, the better it is. Um, just to think about the cumulative interest that you can earn over the years. So, the sooner the better. Even if you can start small, start somewhere.
Yeah, that's great advice for sure. For sure. Okay, and some people want to save for things like trips or purchases. So you know people are wondering, how can I save enough, right, to take a trip, let's say once a year, or to let's say renovate maybe my bathroom or something. I don't know, right? So what do you think about that? How are they going to get there, Sam?
You really have to build it into the budget. So, personally, I revisit my budget every 3 months, and we try to take into account some of those big kind of wish items, whether it's a trip or a renovation, and we sort of look at what the total amount costs that that's going to be and what that means from a biweekly payroll perspective, and then we create a little savings account, we name it. So I have one right now that's Costa Rica for next year, and we tuck money away on a regular basis that helps us kind of get there.
Great. Perfect. Thanks, Sam. And Sapana, one of our members, is asking what types of financial advisors, are available to
Yep.
speak to.
Yep. So we've got all of our branches have financial advisors that you can speak to. There are some that are licensed for so that you can explore more than just GICs, like more than just term deposits. And I also noticed that the next question there was about if the financial advisors are available in branch or also on virtual. So they are also available virtual, both in branch and virtually. So you can set up an appointment through a Zoom call or even a telephone call at first, and then you could visit a branch at another time, however you like. We've got both licensed and not licensed bankers and advisors in all our branches.
Great. Thanks. And Sam, we've got member Trent. He's asking, if he can meet with an advisor just to talk about money management, right? Needing a little advice and guidance potentially about like where his money's going and what he should be focusing on, right? Not so much investing.
Yeah, I mean, all of our advisors in branch are really happy to meet with our members and understand their needs and work with them. So I don't know where this member is located, but we'd be happy to find them the nearest branch and a great advisor that could be a good fit to help with that.
Okay, great. And Judy is asking, can she move her money from mutual funds to the nest egg term deposit? Either of you want to jump in on that one?
So with a nest egg term deposit, it's set up with like a monthly contribution. So you don't really dump money into the nest egg. You sort of start small and then you build it. Um, and when moving money from a mutual fund into sort of another type of fund, you should always speak with your financial advisor about that before you sort of make those types of changes to make sure that you're still like your goals are still sort of being met with the changes in your plan. So anytime you're trying to make, I guess, changes to your finances, you should speak with our financial advisor to help guide you. Does that make sense, Sam, or is there anything else that you wanted to add?
No, I was going to say it's definitely important to talk to an advisor just
Yeah.
about the overall goals that you're looking to achieve to make sure that the nest egg would fit into that, because they're very different products, and so you just want to make sure that it's still helping you achieve your goals.
Perfect, perfect. We have had a few members asking about appointments. So one is saying, well, look, a few of them, there's a common theme. Are virtual financial advisors available, or do you always have to go physically into the branch?
We definitely have some non-face-to-face options. So depending on what they're looking for, they can absolutely meet with someone. So they can call into our contact center, and there's lots of different ways to chat with someone, whether it's online or by phone. And if you reach out to the branch, we do have some options depending on the service that you're looking for, where we can look at doing a video meeting of some kind.
Yeah, and I just want to let everybody know as well, if you do want to make an appointment, you can either call our contact center, or you can actually go to alterna.ca, and we have an appointment booking tool there that you can use as well. So whatever really suits you and how you like to, book that appointment. So more than happy to do that for sure. Okay, and we're going to end it there. There are a few more questions which we will definitely get back to you. We have had, again, a number of questions asking if the recording is going to be available later. And yes, it definitely will be available on our website, alterna.ca. If you've registered for the webinar, you will be receiving an email tomorrow with the link to the recording, should you want to go back and revisit it. Also, we would ask you to answer a quick, really short survey. It just helps us understand some of the things that we can do to make the next webinar even better, or some topics that you would like specifically to see. So if you could take just, it'll take you a minute just to fill in the survey. We would really appreciate that. And I really want to thank both Samantha and Sapana for all the great information. Definitely lots to think about for sure. And want to thank those that joined the session today with us online. We appreciate your time. And as I said, we will be sending you an email tomorrow, so stay tuned for that. So I hope everybody has a great rest of the day. Take care. Bye-bye.
Thank you.